Good afternoon. This is the market update for Thursday, June 20th. And I was actually going to start the video off today with the Gurr Doom song. You recall it from a few years ago when the market was crashing. We had a lot of fun just posting doom, 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 doom. And, of course, you know, if you had your head buried in the sand over the last couple of days, you're going, what the hell just happened in this market? And three little letters, F-E-D, Fed, and down we went for some bizarre reason. Nothing new came out of the Fed, at least as far as I'm concerned. Nothing new compared to what we've been hearing about over the last couple of months. And the Fed actually came out and clarified even more what their stance was. They essentially said, if the economy gets better, we will reduce or slash taper our bond purchases. If the market gets worse, we will increase our bond purchases. That sounds very market friendly to me. And if the economy continues to grow, we will end the purchases next June, a year from now. But for some reason, after initial little pop, they ran for the hills, and boy did they run for the hills. You can see starting yesterday, big flush, and today the flush continued. I believe one of the largest sell-offs we've had since the market started its rally after the election last year. Just a brutal, deeply oversold condition we have now in the market. If we look at the daily chart, you'll remember on Tuesday when we came in right ahead of the Fed meeting, we were saying how great the setup was here. We had broken through the symmetrical triangle. We were about ready to rock and roll to new highs, and then the Fed came and swoosh. We go from 15,300, we're down almost 550 points in 2 days. An extreme MACD level. We didn't even get that positive MACD cross. Just really, really bizarre market. And one of the crazy things about the market yesterday and especially today is we had stocks down. We had gold just got decimated, down $100 an ounce on gold. We had oil down big, and we had bonds down big. So things that should be acting opposite of each other are all acting the exact same way. And that just breeds or means there's panic out there. And whenever you see this kind of really nonsensical panic, kind of lasts for a couple of days, then you have people step back and go, wait a minute, this makes absolutely no sense. And then back up we tend to go. But right now, there's just the risk off everything, stick your money in a mattress kind of mindset in the market. And, that's where we find ourselves right now. Dow Transports, down big, but not as ugly as the Dow index. We've got some support still below versus the Dow already broke down from its support. But check out the chart of bonds. Actually, let me go back. This is the 20-year Treasury bond, and just absolutely dumped over the last day or so. And if we go back and look at a 3-year chart, you can see we've got major support right around here. And typically when you saw the sell-off that we had today in stocks, we would have seen bonds rally on that news. But what's actually happening is the nonsense in the bond market is driving every single other asset class. And, that's just where we find ourselves right now. Now, the put-call ratio, data has not updated, but this ratio is way above 120. I'm sure we'll see that one when the market opens tomorrow, what the actual number is. And every time we've seen it spike 115 plus, we've had a big move back up in the market within a day or two. So that's what we're looking at. Tomorrow, interesting day. Triple witching, that's when options and futures all expire worthless. So we could see a couple of things happen tomorrow. We could see a flat day. We could see, I've started talking and I'm thinking, well, gee, why don't you make a prediction? We could be flat, we could be up, we could be down. But what I mean is we could see the sell-off continue, but more than likely we will be flat to slightly down in the morning. Now, we do have the futures getting hit again on Oracle's earnings report. Oracle down pretty big in after hours, $3 a share. That may weigh on the market as well tomorrow. But really, a couple of days' time, they're going to step back, look at this, and think, what a nonsense sell-off we've had. The Fed has said, when things get better, we're going to stop helping. Duh, is all I got to say. But for some reason, if you read the business headlines since yesterday, all you read was, the Fed says they're going to pull back. That's not what they said. But, that's typical of the business media. Eyeballs sells papers and brings advertising revenue, which is all the business media is about, not actual news reporting. So it's going from hyping one thing to doom and gloom on the other hand, and that's essentially where we stand. PopScan tonight. I actually need to really look back at my records. I think we hit a all-time low on the PopScan. There is a reading of 4 on the PopperScan. 4! I don't even think I saw a reading that low during the 2007-8 crash. And two of the stocks actually on it are those bear ETFs, one for gold and one for, I think actually maybe both are for gold. And the other stock on it is DCTH, which, actually let's look at DCTH. Held up unbelievably well today in the face of the sell-off. Large buyer and ended up closing at the highs of the day. Very, very strong. Strong watch on this one tomorrow for a 50-cent break. And you remember when I was talking, I don't know if I mentioned in the last video, but what we've been seeing happen in a lot of these big runner plays of late is they get a big run, they retrace, and then they run again. Now, you could make the argument, well, that was when the market was rallying, and now we're starting a bear market, etc. And that's the kind of headlines you're starting to hear and the chatter on the message boards. Absolute nonsense. That's all I will say. I've been saying that for forever, and I still stick to that nonsensical thinking that's out there. Now, you've heard me talk a lot about how this market is very similar to what we saw back in 1995, and actually, this is the 1995 chart. Right now, we're at this stage right here, and you can see there was a lot of chop as well back in 1995 in the May through late June market. We actually ended up having it was a 200-point drop then from the highs to the lows, but at that area, that was a 5% drop. A 5% drop right now on this market would be about 700-800 points. So we're just tracking exactly like we did in 1995. And as I've said before, this was one of the most hated rallies till the one we're in right now. And things just kept going higher and higher and higher and higher and higher. And then right about the end of the summer, going into the fall, everyone went, crap, this market's not going to drop. And, off to the races we went. But we've got a lot of nonsense to deal with out there right now. The spooking that's happening in the bond market is flowing over into all other asset classes right now. So we need to just sit back and let the fundies do battle, and common sense will prevail pretty soon. A couple other stocks we had. BPAX from Tuesday retreated yesterday, got the merger approval today. Bounced back, a little bit of a red market, but it's right there at that breakout. So 130 would be the watch for a possible break. Now, disappointing play, ATHX gave us a fat little pop on Tuesday and then just gave up the ghost yesterday and, of course, followed through today, broke through stops. It's just tight rein on stocks right now. And as I've been saying, we're not in a whole lot of plays. We're pretty high cash right now, which is a great place to be, and just looking at whatever momentum we can get intraday, and it seems all the volume is actually moving down into the micro caps and the OTC stocks right now as the large caps get bashed back and forth. I've seen this happen many times before, especially in the summertime when all the other stocks die out. You start to see the OTC stocks pick up a little bit. So definitely a sector of the market to keep an eye on right now. But anyway, back to the market. What's tomorrow going to bring? Anything could happen, but, it's triple witching play. Maybe some common sense will come into the market in after hours and tomorrow, and we'll see some sort of bounce back. But, we're down 500-plus points in a matter of really a day since late yesterday when this sell-off started. So, the Dow does have next support 14,400. That was back there at the April lows when we had that cry of it's over now, back down we go. So that would be the next real support level to watch. And then we've got the 200-day moving average down below. But, you know, we've got the put-call ratio spiking really high. Everyone on the mom is doom and glooming right now. You know, let's see what tomorrow brings. We're going to have an intraday biased focus on plays over the next couple of days till we see what this market does, and we're just going to play it by ear. If you've got any questions, shoot me an email. Any positions you're in or any positions you're looking at, you know, hit me up in the chat room or shoot me an email, or, you know, don't fret about this market. And actually, the education videos on the website, I've updated them. There was an update and it screwed up some of the coding, so I went through and made sure all those videos work. There are a couple of videos on trading difficult markets, so definitely if you're a little spooked about this market and how to handle things in your positions, go back over, review the video. Great little tutorials sitting there for your use. So that's it for the video. Any questions, shoot me an email, feedback, buysellshort.com, and I will see you guys tomorrow in the chat room. Have a great night. Bye.